Phillips in Edmonton, go ahead.
Good evening. My question today is regarding Labrador iron ore. I'd like to find or get David's view, please. Thank you.
Philip, this is a company that we've talked about before on this show. It's been a top pick a few times, I think, of ours. This would be in our top 10 positions across the firm. We really like Labrador iron ore for a couple of reasons. First of all, from the top down, iron ore is a commodity that is in relatively short supply, and Labrador iron ore is a great way to play it because you're not so worried about their costs. You're getting a royalty on their production. So as long as they grow their production over time, then you're going to get that royalty, and you get paid a nice dividend along the way. So we really like Labrador iron ore. We think that longer term iron ore is a good commodity to be invested in. The stock held up very well going through the decline, and we're getting paid regularly. And again, we're looking for yield plus inflation protection, because I know there's not much inflation now, but that's probably the risk of an income investor. And so along the way, they're going to grow their production. We're going to get a little bit more dividend, and total return is what we're looking for, something stable.
And do you see a time when a Rio Tinto or a Vale or someone comes along and says, we want to buy you?
It's not impossible.
Yeah.
And, you know, if something like that happened, or to the Iron Ore Company of Canada, which they get the royalty from, you know, that's fine too. But in the meantime, this is a great income stream. And I frankly would prefer to have this type of income stream than be looking for a bank dividend, because I think in general the banks are in a tougher space and having a harder time getting a return, where some of these companies, commodity-based companies, have a little bit better inflation protection.
Here's a good one from Mary. We don't get a lot of questions about this company. Go ahead, Mary.
Yes, hi guys. Exactly why I'm calling, because nobody does talk about Corning. I think they think it's an old-fashioned glass company with a little museum in upstate New York. David, could I get your comments?
Sure. Well, Mary, Corning, of course, had a pretty good run through the course of last year, and then recently has had a bit of a pullback. You know, in a couple of spaces, they're still in the fiber business to some extent, and certainly that group got into difficulty when Finisar had their disappointing release earlier in the spring. And so JDS and Finisar and all of the group in that area had some difficulty. And then it comes down to consumer spending in the glass business. You know, I think it's a good company. It's inexpensive based on earnings. It's about 8 times the estimate. But having said that, stocks come from 23 at 17. There's no real sign at this point of a turnaround. I'd like to see some technical support there. If you look back over the last year, there is some support at $17. So you could make the case that it's sitting on support. I would prefer to see the price get swung around and start working its way higher, and I'd be happy to pay a higher price. The moving averages are moving lower, so I think that there's some technical challenges there, but they beat the last estimate by just about 7%.
Just hypothetically, in a case like this, you want to see some technical factors on the stock, but do you need to see?
I want to see the sector get better too.
Yeah, but at least a quarter of better earnings, or
yeah, well, no, you know, their earnings, they beat the quarter by 7%, the most recent quarter. It's being affected by the group, and the concern in the optical networking companies right now is that the orders from China slowed. So everyone was quite optimistic about the build out of their information superhighway in China. And then, and the companies played it up quite well. And then in a lot of cases, over the last couple of months, there's been disappointments and slowdowns in orders. And that's a concern for the whole group. So I think you want to watch the whole group, see it get better.
Okay, David, an email from Jordan on BCE, parent of this network. How do you feel about the company? Is it a buy, sell, or hold right now?
I have to tell you, for years, I said, stay away. And I think that George Cope's done a tremendous job with his business. It's one of our core holdings. We own both BCE and TELUS. In fact, in the U.S., we now own Verizon and AT&T, so we think this telecom group is a leadership group in the market. They have the high yields that people are looking for with predictability. And in the case of BCE, they've gone through a great restructuring. I think that people get great clarity in what they can expect by way of dividends. You know, in TELUS's case, for instance, you know, they've said that they'll raise their dividend twice a year for the next 3 years. You're going to get a higher valuation when you tell people what to expect. And I think in the case of BCE, you know, the stock is behaving remarkably well. Everybody's looking for a yield, and you get a great one with BCE, and I think one that can kind of grow over time. So, you know, for years I said it's not great to get a dividend if the share price is falling, but if you're getting the share price moving higher and you're getting a yield, you're getting a total return that's very acceptable.
Another short break here, David. We'll come back with more of your calls and emails on North American large caps. A reminder to always check out BNN.ca, all sorts of great information on there, and video as well. Today, Howard Green interviewed Kathleen Taylor, the head of Four Seasons. That's worth checking out. Come back after this.